Good evening once again. Some of that reaction on the business desk at this hour includes the Johannesburg Stock Exchange trading week, and that says South Africa could not reach a deal with the US over the 30% tariffs that come into effect this month. The local market dropped to a one-month low a week after it broke through the 100,000 point milestone. The rand also weakened, reaching its lowest level since May. Now, efforts aimed at cushioning the blow of the U.S. tariffs are set to intensify. Chief Economist at Standard Chartered Bank, Razia Khan, discusses this with us. Thank you so much for your time, Razia. I think let's first start with we've seen the markets not react positively to this particular development. What's to be said about what South Africa should initially anticipate?
Well, there are a number of things going on. There was always the risk that come August the 1st, South Africa would face tariffs of 30%. And to some extent, this had been priced in by markets. Markets were hopeful that maybe there might be a last-minute deal, but given the sheer number of different countries that the US had to negotiate with, the capacity to negotiate with each trading partner, that clearly hasn't been the case. Nonetheless, we think that given the performance of the rand, initially dollar rand moving higher on the confirmation that the 30% tariff will apply, further to that, weaker US economic data, greater expectations of US rate cuts because the labor market seems to be performing less well compared with what was previously thought, and the rand moves stronger again. All of this together suggests that although the tariffs will have a negative impact potentially on South Africa's economy, we've yet to see what the official response is going to be in terms of a package of measures that might provide some mitigant. The South African government says that it's still looking to negotiate a better trade deal with the US, and that could still happen over time. Nonetheless, for the most part, markets do seem to be taking the news in their stride.
Mitigation, continued deliberations for some sort of a deal that is likely to cushion the current circumstance. What should that look like, especially as we see South Africa in a position that has its hands tied?
Well, there are a number of things that are going on here. First of all, we do need to take a close look at the sectors that are likely to be impacted by the application of US tariffs, of higher tariffs, given, of course, that minerals, metals may well be exempt from this. There is very little that can be done to avert the sectoral impact. We all know that trade policy uncertainty itself has a negative impact on growth just because it slows investment. People are unsure how things eventually settle. It's not an optimal outcome at all. But we also need to look at the big picture, as the South African government has been suggesting. For so long, the narrative has been that in terms of single trading partners, the US, of course, is very important to South Africa. But break it down by region. We know that as export markets, Asia, Africa, even Europe continue to be more important altogether compared to the US. So although economists are going to be kept busy looking at the potential growth impact of all of this, it would be flawed in our view to try to overdo the likely growth impact.
What is the likely growth impact if one were to maybe have a crystal ball into some sort of a near-term future? Because the estimates that we have received so far are quite alarming, especially as they look into an estimated job loss of over 100,000.
Well, with the modeling that's been done, it's very difficult to be able to tell precisely, simply because there are so many different moving parts to this. What if a few days later some kind of trade deal is negotiated? Now, that is uncertain. No one knows for sure. We also know that there's been a big focus on the negatives associated with this, partly because the South African economy's performance has been so weak. So take maybe 0.1, 0.2 percentage points off a very weak growth rate, and it looks weaker still. But let's not forget the structural reforms that are underway in South Africa. The belief that is very much the consensus amongst economists that actually the economy might be in the throes of a slow turnaround, but it is certainly turning around. So, yes, there are near term negatives, there's trade uncertainty. It's not just South Africa. Across the world, when we consider our recently revised global views, we were surprised by the extent of strength in H1, a lot of front loading of trade activity, different countries trying to get their exports to the US sooner, ahead of the tariffs being implemented. And of course, the big concern is this can't possibly be sustained into the second half of the year. So there are clear downside risks to the global economy, and this will not be great news for South Africa's economy. But we can't look at just the one factor. We do need to consider everything that is going on.
Another factor that South Africa does need to look at is AGOA, where the relationship with the US is concerned. On the domestic front, the likes of Business Leadership South Africa have already indicated that it may be a foregone conclusion that the September renewal of AGOA is at least off the table. What would South Africa be losing further there?
Well, South Africa, given its manufacturing base, given its auto sector exports to the US as well, was one of the key beneficiaries in the region of AGOA preferences. It's actually been the dominant view since April the 2nd, the so-called Liberation Day, that in effective terms means there just isn't an AGOA anymore. And very few African countries, even though the tariffs for very many countries were revised lower to around 15% from the earlier really high threatened levels, very few African countries actually anticipate that there is going to be a renewal of AGOA. So South Africa certainly doesn't stand in isolation from that perspective. The economic impact may be greater given its manufacturing base, but this is the reality.
Lastly, can South Africa afford to just walk away, leave things as they are with this 30% tariff, or it stands us in a very good footing that we actually do get a negotiated settlement of sorts?
South Africa's government will certainly try to get a better trade deal ultimately, but there's still uncertainty around whether this is going to happen. But if we were to see a multi pronged approach, looking at other rapidly growing regions of the global economy, looking at a deepening of trade ties along those new trade corridors, it's not a given that this is going to be just an ultimate deadweight loss, that there'll be nothing to replace it. What we have seen, the dominant trend in the recent past has been a shift in trading partners globally. There are South-South trade corridors that are much more important. South Africa's trade with the rest of Africa, still a very vibrant, rapidly growing part of the global economy. This is expected to deepen, and this will certainly provide some impetus to growth in the future. Now, for individual sectors, it will in no way compensate for the potential loss of a key export market. There will be pain alongside all of this, but the policy horizon, the long term perspective, is still all important to keep in mind.
Thank you, as always, for your contribution. Chief Economist at Standard Chartered, Razia Khan, talking to us about the dynamics over the trade deal that is somewhat anticipated for South Africa to mitigate against the 30% tariff that is coming into effect this month.